Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, and/or financial topics. So we're going to dive right in, take a look, and see what people are sharing. If you want to follow me, it's at Finance. And if you want to join our community, finding-value.com. We've got a Sunday, which is today, question and answer session at 5 p.m. Mountain Time if you're interested. We can go over whatever you guys like. We can go over gold and silver mining companies, the opportunities that we have ahead of us. We can go over uranium companies if you guys want to hit those up, or oil and gas and other sectors. So that's what we've got going on at 5 p.m. today, Mountain Time. Mayday coupon code is still active if you're interested. So the long view. This guy states, I don't understand how anyone can look at what the private sector has done in the last 15 to 20 years and want to interfere with what's happening. Life is so much better. Every single gadget you could imagine, from heart rate monitor to compass to camera, in your pocket. Cab rides by pressing a button, groceries at your doorstep with auto reorder, self-driving electric cars, affordable satellite internet, civilian space flights, on and on and on and on. Social media networks for everything from dating to fantasy football. The thing that I would ask this question here, is it really better? I mean, I look at the 90's and 2000s, I thought they were pretty good. In fact, I would state that the 90's and 2000s were better than today for the happiness for most individuals. I've seen, I mean, if this is so great, then why is the life expectancy of America declining? Why is obesity higher today than it's ever been? Why do people feel more disconnected? Is social media really that great? What about all of the people that have addictions to their phone, iPhones, or whatever the heck they've got? Is that better? And from what I've seen, I mean, cars are basically the same. Even if we go electric, they don't really do anything different. It's just a form of transportation. Yes, a lot of things have gotten smaller, and the convenience factor for some things has definitely gone up. But is life that much better? I don't know. I would say that maybe we've taken a step back instead of a step forward, for the majority of people, and maybe the happiness and the connectivity that they feel in their life, their purpose, the happiness, the um, I don't know. I think a lot has to do with iPhones and stuff like that, addictions to that. Carrie says, "What is the plan for the radioactive waste?" This was in response to someone posting about 3 Mile Island and some other nuclear reactors and the growth of nuclear potentially in the future. So a lot of people are worried about the radioactive waste. Well, I would say the same thing about absolutely everything. Wind turbine blades, where do they go? They just go and they dump them. There's no recycling them. And they dump them in an open field and bury them. And it's not just a few blades. This is a lot of blades. And we have to continually put new blades on the wind turbines, and continually to do it forever. I mean, that's like a never-ending stream of just massive waste. In fact, it is so wasteful that radioactive waste is a far better solution than wasting all of those blades. What about all those the steel poles that they post those things on? We're gonna have a lot of those sitting around. We also have a lot of waste from solar. And I'm talking about a lot of waste, not just a little bit. Radioactive waste is by far the most controlled waste of anything that we've got. These other things are absolute disasters. Not only that, we have to mine all this stuff out of the ground. So we're going to Swiss cheese our entire earth in order to get these things. Nuclear is by far the least environmental impact of anything. Oil, natural gas is probably the second least. So nat gas, then oil, then coal, and then you have solar and wind, which are very impactful because you have to displace a lot of area to make them work. And then you've got all the waste afterwards. Anyway, that's my opinion. Here's one. This is the mid 1990s bull market returns for that gold bull market. So the average producer more than tripled investors' money during this period. Once again, these gains occurred in a relatively short time period. In this case, inside of 2 years. And if you're that kind of investor with the courage to buy low and the discipline to sell during a frenzy, it can be worth millions of dollars via the junior gold mining market. So this is the returns of juniors in the mid 1990s bull market. Cardaway went from 10 cents to 26.14 for a 26,000% return, or a 260 bagger. And then we've got a bunch of other ones. This is another big one. Pacific Amber doing a 43x or 44x. Arequipa 57x. Taking all of these and taking the average is 3,873. So that is in terms of percent. So about 39 times your money. So what you do is you take 39 times. So every dollar invested returned $39 in a 2-year time span. This is a greater return than the majority of the so-called best investors in the world. They would get returns over this, this type of return over a 20-year time frame. This did it in 2 years. Now, the tough part is you might have to sit in it for a little bit before we get these returns. Are these returns coming today in the gold bull market? I think they are. I think they are. That's my opinion. Here's another one too. So this is returns of junior mining companies during the end of the gold bull market in 79 and 80. Again, that 2-year time frame. And these are the returns here in that 2-year time frame. So about 2,313. That's 23 times or 24 times your money. So every dollar returned $24. So every dollar invested returned $24. Now, this is probably bottom to top. Let's say that we capture 70% of that move or something like that. So let's say we capture like a 15 bagger, about 15 times the money. So I think that's definitely doable, a 15x. 15 times, and again, that's every dollar returns $15 to our pocket before tax. Big picture, U.S. commercial crude stocks for oil continue to track the bottom of the 5-year cloud. Look how low we are, guys. Right at the bottom here. So it's not that we've got weak demand and inventories are starting to pile up. In fact, demand is holding steady and we're at very low inventory levels. So why is oil so low? I think it has a lot to deal with the fear of a recession, not actually a recession transpiring. And we'll see if it transpires into anything. But right now, we have low inventory and it's continuing to work its way lower at this time. Trader says, so this is XME. So in last week's analysis of XME, we anticipated continued bullish momentum following the previous week's inside candle at support. This week we saw upward follow through, leading to a further consolidation. I'm going to go straight to the chart here. So this is basically you've got resistance, you've got support, the trend line. You have higher lows coming up into this resistance zone. I think we're going to break it, yes. And this is the Spider S&P Metals and Mining ETF. So this is a good setup there. This is what it looks like. It's called an ascending triangle. It's bullish, where you hit resistance, and then your lows continue to work its way up right into that resistance line and eventually break it. What you're doing is you're grinding down the sellers at this spot. So you get some sellers, and the sellers are the strongest in the beginning. So that's why you get the bigger move lower. So they're strongest here, a little bit less strong, a little bit less strong. You're wearing them out, and then you finally break through. That's the psychology behind it. So it's enter a long position on a confirmed breakout above the resistance, ideally with increased volume. Set a stop loss below the most recent higher low to manage risk. Measure the triangle's height to establish the target, which is the height of the entry point here. Monitor the trade, adjust your stop losses to lock in profits as the price advances. I'm not a trader. I look at this and I try to buy it as low as I can and then just hold on. I'm more of a fundamental hybrid investor. I use technical analysis for my entry points. And then after that, I just kind of hold on until the bull market's done. And that's the only way that I've found, looking back at history, to do it in the most reliable manner with the highest amount of returns. That's what I've come up with. Coming on back, we've got the long view. Oil positioning hasn't been this bearish in over a decade. Look at this, guys. We are negative. We are negative. We are net short in gas oil. Everywhere else in history, we've been long. Somebody's, the collective has been long. First time we've been short. So what's going on here? Are they like actively trying to hold the price of oil down through this? Are people just that scared of a potential recession? Is there something that they know that maybe other people don't know? Maybe the banks are going to go belly up or something like that. I don't know. But this is an anomaly in history for this net short in gas oil. Warren Buffett says, we have usually made our best purchases when apprehension about some macro event were at a peak. Uncertainty is actually the friend of the buyer of a long-term values. So if you want better value, you want to buy when there's the most uncertainty and fear in the market. Willem Middlecoop. He says, why silver hasn't exploded yet? The usual suspects on Wall Street keep selling paper silver, aka the COMEX futures. This is the concentration of traders in the CFTC COTS, which is basically people shorting these commodities. The most short in terms of days of production is silver. Second is platinum. Third is gold. Fourth is palladium. And then coffee's up there too. So this is where we get our short squeeze. Now, what they've been doing is they just continually pile on more and more paper to suppress the price. This is what people are, talk about. To suppress the price through releasing an unlimited amount of paper contracts. So if people get bullish, they just flood the market with paper contracts, overwhelming the buyers. No matter how many buyers you come, you can always create more paper derivatives to soak up the buyers, so to speak. So they're holding the price down through the quantity of paper futures, is what the argument that people have is. And they're doing it the most in silver, platinum, gold, and palladium. And the reason they are doing that, because people will say, well, why the heck would anybody do this? Gold is your measuring stick. That's what used to be money. So they want to hold gold down because all of your ratios are against gold, like gold to oil ratio, gold to platinum, gold to silver, gold to whatever. So they think that holding gold down is a cap on the entire commodity complex. So they think that holding gold lower is in fact holding the commodities price lower. If you hold the commodity price lower, that's the inputs for all the consumer price index stuff. So that's why they do it. At least that's the argument for why they do it. Navel says, or Navel, however you pronounce his name, a fit body, a calm mind, a house full of love. These things cannot be bought. They must be earned. Here's another one, charting silver. So charting silver is just basic geometry. When the underlying curve is upwards, the time scales become shorter. And I think that what that means is that this time scale this way compresses as you go up and up and up, faster and faster and faster. I'm not exactly sure what this ABXBA is. Kind of looking, trying to make sense of that. But yeah, it's definitely looking like it is accelerating to the upside. We've got asymmetric bet in platinum coming soon to a theater near you. Sell your house corner is what he says, to buy all the platinum. I think this person is, I think, speculating that this corner here is going to be very similar to this corner here, and we'll get a potential breakout at some point. Platinum does perform well under an inflationary condition. So right now, gold and silver are the ones going up because it's a fear trade of a recession. When those subside, I think platinum's going to take off. So we have to get through this fear trade, get past it, and then I think it will become an inflation trade. And that's when platinum goes ballistic goose, is what I'll say. It goes ballistic. Grady says gold, the second and final upleg of the secular bull market, has started. Whatever you do, do not mess this life changing generational opportunity up. You will have one chance at it and one chance only. So, this is the HUI monthly 25-year chart for the gold miners breaking out. He says, is it time to revisit the upper trend line of the channel? He says, I think it is. We bought the very lows heavily at the service, different company categories at the two different lows. Yeah, and we did too. We bought in this general area all through here in a variety of companies, and now they're up quite a bit. They're up some hundreds of percents from those bottoms. Fighting between going really long or really, really long. If oil demand doesn't fall off the cliff soon, the short positions will get squeezed as backwardation continues thanks to the crude tightness. The cost to hold the short positions will be too expensive, according to HFI research. Hopefully that's the case. I'm still long a lot of oil equities. Getting paid dividends. I don't want to give those dividends up, at least not yet. When in doubt, zoom out. And this is scientists have captured Earth's climate over the last 485 million years. Here's the surprising place we stand now. So right now, we are basically at the coldest temperature. So all of that CO2 that people are talking about is complete hogwash, in my opinion. A lot of the data that I've seen, and there's a cycle when the Earth so-called breathes in, breathes out of CO2 and oxygen. We barely make a dent in terms of our carbon dioxide emissions in relationship to what the Earth breathes on a normal cycle basis. We're a few percentage points, that's it. This also is evidence going back of the global mean surface temperature, where we're actually at a very low point. What people do is they focus in on this circle here and say, oh, it's been going up. We have a long way to go higher to get back to, the dinosaur eras where they had much more carbon dioxide in the atmosphere than what we do today. Much, much, much more, like 5 to 10 times more. And that's what I've got for today, guys. So that's all I've got. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. Come to the Platinum question and answer session today at 5 p.m. Mountain Time as a reminder, and we'll go over whatever you guys like. I think there's some people wanting to ask some questions about leverage and how things move. I'll give you my opinions on it, and we'll also probably look at some good entry points for companies. But that's what I've got for today. We'll catch you next time. This is Finding Value.